Max, in this digital asset space, tokenization industry, or whatever you call it, you have been called the new kid on the block. So tell us a little about your company and what you have launched in Europe.
Yeah, 21X is actually the first EU DLT market operator. We obtained the so-called DLT TSS license under the EU DLT pilot regime framework, which was introduced in March 2023. Just last year in December, after 2.5 years of preparation and 1.5 years of licensing processing, we've now actually just launched this year what is the first of its kind. We call it a decentralized financial market infrastructure, and it allows for both primary and secondary markets on-chain. So we have a matching, trading, and settlement system that are running on public blockchain. Basically allowing for stablecoins or tokenized cash and tokenized assets to be issued, distributed, traded, and settled on-chain.
What about securities? Is that also part of the launch?
Yes, absolutely. So under the EU DLT pilot regime, you basically can you can say it focuses specifically on DLT financial instruments or security tokens. Not to say that we will not consider maybe in the future also allowing for digital assets, cryptocurrencies to also be used as a means of say settlement currency or asset to be traded. But currently we're solely focused on stablecoins, where we have under MiCA clear regulation in Europe, right? We have stablecoins being issued by private agents. We have commercial bank issued stablecoins, and then in the next step also wholesale CBDC coming up, and we can trade DLT financial instruments of the nature of equity, debt instruments, and also fund structures.
You have also called this sort of the Spotify moment of on-chain, and what is your thought about that?
Yeah, we call it, or I keep on referring to the Spotify moment of capital markets.
Okay, yeah.
Yes, the reason being simply that I think there's a lot of parallels that we can see between what happened in the music industry, right? Looking at the transformation from CDs to digital, the digital form of music, MP3 formats and other type of digital formats, where unlike in the past where you needed to go through a quite cumbersome process of actually obtaining CDs and listening to them, you can just go online and you can click a button and you instantly can listen to music. And kind of the same thing that is happening now also in the space of public and private markets, where we don't have settlement delays anymore, whether they are T+1 day or 2 days in the public sector, or in the private markets like for days, for weeks, right? Sometimes even months. And I think that is one of the I think most important reasons to highlight why we say, okay, with this new market infrastructure that we can provide, and maybe to give also the audience an idea, right? We can now allow for direct access of anyone, right? And it becomes real-time investing also, as we settle in T+1, 2 seconds on our market infrastructure, right? And so, that's why we refer to it, as the Spotify moment of capital markets.
But you have been working on it for many years, and you have talked to a lot of authorities and whatever, and now you are going to the States. And why is that attractive at the moment?
It's actually the case that we, under the new U.S. administration, under the candidacy of under Donald Trump as the new president, there has been a significant shift in the U.S. I mean, it's been stated clearly and also publicly, by the regulators in the U.S. that they're open to discuss also new types of business models. Given that we are now, if you so want, the pioneer in Europe, holding this license, what better opportunity would there be to go and present ourselves to the regulators in the US? And that's what we did. And we were, honestly speaking, overwhelmed by the reactions that we received. It was, for us, a very positive surprise to see that we are now in a position to really also replicate what we've done in Europe and roll that out in the US in, say, less than 12 months' time. And that's, that's what we're going to do. And I think this is also in line with our vision of globally interconnected on-chain capital markets.
When you think about the regulations, you sort of could say that Europe was ahead because of the MiCA, and you had a lot of debates and struggle in the States. Now they are moving fast. Is then Europe getting behind? And what can Europe do to replicate or do something about this new environment?
So I think that's a very that's a very fair question to ask, and at the same time, I'm not sure if it's easily answered, because I'm not sure how the U.S. is going to continue on this track. But what I can witness so far and what we've seen is, yes, there has been new regulation implemented in the U.S. We have the Genius Act as an example, driving stablecoin adoption. We know the U.S. and the Fed is taking a different approach when it comes to, say, CBDC, right? Also wholesale CBDC, as opposed to Europe, also here with the Bank of England and ECB, right? Both in the UK and the EU, having a clear path for wholesale CBDC. There's been a different, say, line of direction that the US has been taking. And I think that if we take a look at now how they are going about, introducing also new business models to the US market, it becomes clear that it is a bit of a different approach, in the sense that the US is not it doesn't require for regulation to be in place. It is actually allowing for the conversation with the regulator to basically approve to certain exemptive reliefs, which we also have under the EU DLT pilot regime, by the way. We also have 17 exemptions from CSDR. We have 1 exemption from MiFID II. But still, they don't have a clear set capital market infrastructure regulation in place that leverages blockchain technology. And I think that in the next coming months, I would assume, or in the short term, that they will introduce that. And in order to not further delay catching up, because US was behind the curve, and they certainly were behind Europe so far, I think that's the strategy and the route why they've gone this way. Do I think that in the future, Europe will be, losing that advantage towards the US? I think that it is not too late for us to, enter, with full force into this competition. And I think it's overall good for, harmonized capital markets to kind of, level each other out on the regulatory frameworks. I think that's in the interest of all of us.
Maybe start with doing this pilot regime permanent, or do something like that.
Oh, that's a modern. I think that for me is actually not even a question, right? I'll be honest with you. I mean, 21X as a pioneer in Europe, we've taken, also the work with the regulators, policymakers very seriously. We've invested actually a lot of money into putting together also position papers and, also elaborating to the regulators why we think that it is critical to ensure market relevance and also growth for this new industry, to really, set the framework and make sure that the framework develops in the right direction. And I'm very optimistic. I remain to be optimistic that Europe is going to find the right answers to some of the issues that there clearly are, right? We have thresholds on volume, we have product restrictions, we have the unfortunate case that there's a timely limitation, right, with 3 years and the renewal after 3 years for a 6-year period, even though Verena Ross already mentioned last year that the DLT pilot regime is here to stay. This is unfortunate, and I think these are things that can be resolved easily. And given the current developments of the conversations with the regulators, also in the EU Commission, and to my understanding also the dynamic in the EU Parliament, I'm very hopeful and optimistic that the word pilot in EU DLT pilot regime will soon disappear.
we are now in the transformational phase where disruption is happening, and we always have to then use new words to understand things like tokenization, like digital assets, but most of the investors are still used to the old world, the traditional world, where they can buy stocks and buy shares on NASDAQ or whatever stock exchange. And you have now launched a new marketplace focused on the digital assets. Will we in the future see these assets being traded on the same platforms? Will there be sort of a merger? And investors will just say, I'm buying stocks or I'm buying bonds, not necessarily digital or tokenized bonds or stocks.
Never say never, but I don't think that we will be ever trading traditional securities on 21X, just because there are already market infrastructure providers out there that are doing a very good job at doing that, right? And this is something that also, requires critical mass. I think this is a very saturated market with a very clear offering all over the world, and so for us, our focus is really on tokenized securities, and I don't think that it's going to take long for that transition to really happen. I think that it's going to take a couple of years. Obviously, we're talking about huge volumes, right, that are already today, I believe there's with DTCC about $100 trillion US. With Euroclear and Clearstream, I think it's in the range somewhere between 40 and 50 trillion euros that are in their CSDs. But this is going to obviously take some time, right? And at the same time, I think that the transition will also come down to regulation being in place that is actually allowing us to really leverage the benefits that the technology brings to the market. So, yeah, for us, I would say very clear direction and focus on tokenized assets. I do think that, when we are looking at the actual investors, that they won't notice a difference, right? I mean, nobody really cares about the underlying technology. It's all about the convenience, the usability, the simplicity, right? I think that's already very clear. Yeah.
Thank you very much, Max, and we look forward to the new news from you guys.
Yeah, thank you, Martin. It's been a pleasure.